Welcome to the investor conference call, Grupo Energía de Bogotá Results and Key Developments First Quarter 2013 Special Report ConTugas. My name is Sandra and I will be your operator for today's call. At this time, all participants are in a listen-only mode. Later, we will conduct a question and answer session. Please note that this conference is being recorded. I will now turn the call over to Mr. Rafael Salamanca from Grupo de Energía de Bogotá Investor Relations Office Team. Mr. Salamanca, you may begin.
Thank you, Sandra. We would like to welcome everybody to this first quarter 2013 earnings conference call of Empresa Energía Bogotá, parent company of Grupo Energía Bogotá. Today we will have special report of our Peruvian subsidiary ConTugas, responsible for the construction and operation of one of the largest natural gas transportation and distribution projects in Peru. We gladly present our speakers this morning. We have Mrs. Sandra Fonseca, our Chief Executive Officer of Grupo Energía Bogotá, Mr. Jorge Pinzón, our Chief Financial Officer, and Mr. Enrique Cadena, General Manager of our Peruvian subsidiary ConTugas. We have also this morning Mr. Juan Felipe González from the Investor Relations Office team. My name is Rafael Salamanca in the group's Investor Relations Office. We will begin this conference with some introductory remarks from our new. We will provide an overview of the group structure and our business strategy. We will continue an analysis of our 1Q13 results and key financial indicators. And finally, we will provide some additional information on ConTugas, including its business strategy and financial results. At the end of the conference call, we will be ready to address your questions and comments. Now I turn the call to Mrs. Sandra Fonseca, our CEO.
Thank you, Rafael. I want to extend my welcome to everyone who is participating in this call. I would like to take a few minutes to review the recent accomplishment of the group and, more importantly, our vision of the future. Capital markets, investors, and in general, all our stakeholders are witnesses of the successful performance of EEB in recent years. We have grown from a strong player in Colombia to a group with a major international presence. By concentrating our investments in one well-defined segment of the energy sector, we have become a regional leader in the electricity and natural gas sector. Finally, we have made the transition from a company with only a small presence in the capital markets to become one of the Colombia's largest issuers of equity and international bonds, as you know. Our challenge is to use this solid base in order to fully take advantage of the new opportunities and, of course, new challenges that our position provides. We are entering a new era. The numbers that have been reported in the press reflect the magnitude of the challenge. We expect to invest approximately nearly $3,000 million over the next 5 years in pursuing our successful strategy of focusing on energy transportation. We will continue working over the coming years to make ourselves the #1 business group for energy transportation at the regional level. We will continue growing in a regulated natural monopolies through the strategy of grow with a regional vision. You may already know that we are participating in 2 important bidding processes in Chile for the construction and operation of power transmission assets. This is not only the opportunity that we are evaluating. This is not the only opportunity that we are evaluating. We believe that there exist interesting opportunities to increase natural gas transportation and distribution capacity in Colombia and also in Peru, and to increase our participation in the electricity markets in Colombia, Peru, and Central America. I just been past week in Guatemala, and I am pleased to report that we are making good progress in our transmission investment there. In the past, our focus has been on the development of projects that serve local demand in the countries where we operate. I have the impression that interconnection projects will have a greater importance in the coming years, and we definitely expect our group to be ready to take advantage of these opportunities when they arise. Also, we are looking for opportunities in already operating companies. I also believe that the company should expand the range of potential geographic markets. We will seek to take advantage of opportunities in other countries of the region where we do not currently have a presence and that offer a sound regulatory environment. The challenges are great, but without a doubt, the resources of the company that I have been entrusted to lead are equal to the challenges. I am confident that they will achieve our goals for the benefit of our shareholders and all, of course, our stakeholders. So, thank you very much.
Thank you, Sandra, and good morning, everyone. This is Juan Felipe Gonzalez from the IR team, and I have the responsibility to conduct part of the presentation today. Starting with I think it's worth remembering what is our strategy and an overview of Grupo Energía de Bogotá. Remember that Grupo Energía de Bogotá is a regional leader in the energy sector. We have investments in the electricity and natural gas. We do not do and won't do E&P in the natural gas segment. And we have a regional scope, meaning that currently we have operations in Colombia, Peru, and Guatemala. And of course, the group is seeking for new opportunities in other countries in the region, especially Chile. The company was founded in 1896, so is a long-standing company with a lot of experience in the energy market. The controlling shareholder is the District of Bogotá. It holds 76% of the shares. And the group is one of the main issuers of shares and debt in the Colombian corporate world. Our strategy is focused on the transportation and distribution of energy with a regional scope, as I mentioned before. Since we focus on natural monopolies, and since we also have investments in non-controlled companies, our current strategy is to grow through controlled subsidiaries. So most of the investments that we are conducting right now we are doing so through controlled companies. We have ambitious projects in execution. That's one of our main characteristics. It's not very common in other utility companies. The President has mentioned in the media that the current business plan is worth $2.7 billion. So it's a very ambitious plan under execution. We work in countries where we feel comfortable in terms of the regulatory framework. And we believe that's the case in Colombia, Peru, and Guatemala, and also Chile, which is a country that we want to be in. Of course, we work in a business that is capital intensive, so we need to have good access to the capital markets, and we believe we have a record on that sense. We are a major issuer of debt in the 144A market, and we also are one of the main issuers of shares in Colombia. Our investments, we have investments in all the value chains of electricity and almost all the value chains of natural gas. Let's please review the key developments for this first quarter of 2013. On March 31st, Shareholders Assembly approved a payment of dividends of 43.96 pesos per share. This dividend is paid to the minor shareholders right now. But I think one of the main messages here is that this dividend distribution is in line with the company policy of distributing almost 100% of net income. That's what the Shareholders Assembly approved last March. And also the attractive dividend yield compared to other companies, to other similar companies. Also, in this first quarter, the stock was included in the Colcap, one of the main index in the Colombian stock market. The reason behind it was the increased volume that the share receive, or that the share received last year. So there was an increase almost 3 times of the volume compared to 2011, and this enabled the stock to be part of this small cap index. Also, on April, EEB was awarded with a project in Colombia. The project is called Chibor 2. It is on the electricity transmission segment, and the estimated capex is around $101 million. And also very important to mention is that the board of directors of EEB allowed the company or approved presenting a bidding offer in a process in Chile to construct and operate electricity transmission lines. The total estimated value or capex of this project is $165 million, and the results of this process will be announced in June 2013. Also, the board of directors approved the creation of a service company in Peru, similar to a company that was created in Guatemala. This is a company that will provide engineering services in Peru in both the natural gas sector and the electricity sector. And our president, Sandra, announced or confirmed the interest of EEB of participating in the project for the interconnection of Colombia and Panama. And she noted, and this is very important, that the company expects a competitive process. In terms of key developments of TGI, the shareholders meeting did not approve distributing net income in relation to the operations of 2012, and so the legal reserves were constituted for around COP 157,000 million pesos. And these reserves will protect earnings from exchange fluctuations. Also important to mention that on May 7th, Standard & Poor's raised TGI's foreign currency credit rating from BB to BBB minus, and at the end of 2012, the Colombian regulatory body, CRED, approved an adjustment in the tariffs that will be reflected in approximately 10% of increase of net income. That's what TGI expects starting 2013. In relation to Cálida, on April 1st, 2013, the company was able to close a debt issuance in the international markets for $320 million. This was a very successful operation, and these resources will be used for both to finance the expansion plan of the company and to improve the debt maturity profile. In relation to a Guatemalan company called EEBs, EEBs in Guatemala was awarded projects for approximately $73 million in the first quarter of this year, and these projects are related to interconnections to the Trexa system. And finally, and in relation to Trexa, the board of directors of EEB approved guarantees and intercompany loans for $230 million for the period between 2013 and 2014. Remember that the finance structure of this company is 50% equity and 50% debt. The equity resources are already there. So with these guarantees provided by EEB, the company will go to the debt markets in Central America in order to raise the remaining 50%. Let's briefly review the key financial results of the first quarter of 2013. Starting with operating revenue, you will find in the consolidated financial results that the company had a significant increase in operating income of around 25%. The principal variables explaining this increase are of course, the entrance in operation of the third phase of Cusiana in the third quarter of last year. Also, the increase in tariffs that FEC allowed TGI to charge its customers. And finally, you will have to remember that in the first quarter of 2012, the company incurred in cost, one-time costs related to the debt maturity, debt management operation that the company did in that time. In relation to net income, you will also find a big increase of around 42% in net income, basically explained by, of course, the increase in operating income, but also the increase in dividend payments by Emgesa, Codensa, and Gas Natural. In relation to debt indicators, that's the next slide, Rafael, please. Leverage indicator, as usual, is very low, so meaning that the company has a lot of space in order to finance its business plan. The leverage indicator had a reduction, basically because of an increase in EBITDA, but also because of a reduction in net debt, because the company did some payments in relation with the short-term debt. And you will also find an increase in the coverage indicator is a very high increase. And the explanation behind it is, again, the increase in EBITDA and also the lower financial expenses. Remember that EEB and TGI, both companies, did two successful debt operations in 2011 and 2012. So these operations have resulted in a high decrease in financial expenses. And that's all for my part, so I will turn the presentation to Enrique Cadena of ConTugas. Enrique?
Good morning, everybody. Yes. Good morning, everybody. I would like to start this report give you an overview of what the natural gas industry is in Peru. Based on sources from the Energy Department in Peru, we have more than 11 million or 11 teras of natural gas reserves. And compared with the balance with the demand, we report that the country that has enough reserves to serve the demand that is already in place for the next 10 to 15 years based on the distribution system that are already in development. That shows us a good company's future in terms of there is enough sources to develop all our business in ConTugas. So not only that, it's a good information, but also there are a couple of fields that are in the development process, very close to Malvinas, which is the main source of natural gas, that have a huge perspective on natural gas reserves. That gives us, again, confidence that the future of natural gas in Peru is very positive. Also a good system that has to be disclosed in terms of future of natural gas in Peru is the policy that the government put in place a couple of years ago is committed to develop a mass distribution of natural gas all over the country, and that's something that is working in the face of Peru, and we should expect results in the next 5 to 10 years in terms of new business, not only for ConTugas but also for the group. Focusing on ICA, we have a population of more than 700,000 people in the department. The GDP growth has performed in average over the GDP of the country of Peru. Last year growth at 5.9% of 2012, and it has the department two main areas that the country assigned as a hub for petrochemical and industrial. which are Pisco and Marcona. Pisco is an area that is developing very quickly as a hub for a steel mill, fishing companies, but also petrochemical companies. And Marcona is in the process of developing a hub for power generation and petrochemical, which give us a good perspective for the next years in terms of growth and future. In terms of technical or construction-wise, the area is desert and plain, which is doesn't provide huge struggles or difficulties in terms of construction, and we want to see those results in terms of the progress that we have made in the year of construction of the project. In addition of that, the pipeline that brings the natural gas from Malvinas to Ica is in the expansion process, and already we expect that they're going to be finished that based on the information that they are providing by the end of 2015 or beginning of 2016. Focusing on our distribution business, ConTugas provides natural gas to the main 5 cities of the department, which are Ica, Pisco, Nazca, Marcona, and Chincha. The concession is 30 years, and the length of the pipe is about over 200 kilometers, 251 is the trunk, and 54 are branches. The right-of-way, almost 87% of the total right-of-way is owned by the Peruvian government, which provides a very confident position in terms of to have any difficulties in terms of right-of-way. The principal obligation that we have is 24 months after the closing date, we have to finish the pipe, which already we can report that we are on schedule and we don't see any issue in terms of completing that goal. And in terms of connection of households, we have 31,000 for the first year and 50,000 for the next 6 years after the closing date, which is something that we are making a good progress in terms of the project. Giving an overview about our strengths, the first strength that we see on the project is that we are a natural monopoly with a stable framework, regulatory framework. We have an exclusive right to distribute natural gas over the life of the concession, 30 years, and due to the economic scale that we have in the pipe, we have a natural monopoly in the area. This is an essential infrastructure for the Peru. We are considered one of the main projects and give us some benefits in terms of process and traffic here in Peru based on that, and that give us the strength to move the project very quickly with the support of the government. This is a major and economic impact in the service area. We believe that this project is going to create a very developed process in the next 4 to 5 years, providing new industries and projects to the area, and helping of increasing even more the increase of the GDP in the area. The potential demand that we have already in the project has been growing in the last 3 to 4 years, especially in steel, agro-industrial, power plant generation, and petrochemical sectors. And those projects are in the process of developing in the region. The other thing that we have is that we have a predictable and a stable long-term revenues after signing the contract, which is the type of business that the group likes to have. We have a regulator that allows stability in the revenues from the distribution system. The tariffs are nominated in dollars and adjusted by the combination of inflation and index. The tariffs have an initial period of 8 years with no changes or no revision from the government, and the future tariff after that will be reviewed every 4 years to recognize any investment that we have on additional in CAPEX and OPEX. And we have long-term take-or-pay contracts for a minimum of 10 years that give us that predictable and stable long-term revenue for that period. And the other option that we have is the competitive of the natural gas or the prices of natural gas. Right now, with the substitutes that are in ICA and general in Peru, we have savings compared with the natural gas. Any company or household that converts to natural gas, the savings are between 43% to 75%, which is a very interesting saving for any industry to want to compete in this environment right now. And the last trend that we have is our sponsor, which is the group of Empresa Energía Bogotá, which is leader in natural gas transportation and distributions in Colombia and Peru. Talking about our regulatory framework, we have an stand price. The distribution tariff is based on demand. We have three scenarios that assure to allocate or recognize all the investment that we have in every scenario of growth through our tariff. As I said before, we have an initial tariff of 8 years from the start of the commercial operation, and we have a cross-subsidy of $150 per client to help to pay the installation of any household that we allocate in ICA. In terms of demand, we have about 51% of the demand will be located as we have right now, based on the requirement of natural gas, will be in electricity, 44% will be in industrial, 5% will be in vehicles, and a small part, which is between 1 to 2%, will be in residential and commercial. The demand by location or by city, we have 57% in Marcona, 33% in Pisco, 3.6% in Chincha, in Independencia, which is very, very close to our Hope or our main city gate, will be 4.6%. So we have very distributed demand in terms of any of the cities that we have in ICA. As a project, as a construction process, we already have at March at 75% of advantage. As right now, we are reaching the 80% progress of the project. We have more than 150 kilometers of high pressure pipeline already welded and ready to test. We have 148 kilometers of low pressure network. As today, we have more than 240 kilometers of low pressure built. More than 2,000 cells we have at March. Today, we have more than 15,000 residential clients already cells. And we can say that 100% of the right-of-way as today, we already been negotiated, and we are holding for titles, which is a process that extends to more than 4 to 5 months on only 10%. But in terms of agreements, we have 100% of the right-of-way already negotiated, which is just a strong confidence that we don't have any issue in terms of right-of-way. On the environmental social action, ConTugas presented the environmental impact study, which is EIA, to Ministerio de Minas, carried out the workshop and required public hearings addressing with the observation, and we already have that approval at December 15 of 2010. As today, the company has complied with 100% of all the requirements of that study, and we don't have any issue in terms of environmental or social related events. As you can see in the map, this is the progress in any of the branches that we have. In terms of Chincha, already in place the whole infrastructure that we were preparing to have to serve all the industries in that area. we have 87% of the area between Umay and Pisco. As today, we have about 93% of that between Umay and Pisco. And Umay Ica, we have 89% at March. As today, we have about 94% of that part already built. And from Ica to Rio Grande, we have 35% at March. As today, we will have about 45% of that part already in place. And to Marcona, we already have the pipe welded, and we are in the process of finish all the right-of-way and clean the right-of-way, which will have about 40 to 45% of that pipe in the process. In terms of CapEx, we have an investment of $345 million, which is divided by 98% from capital, 23% which is a disbursement from EEB based on a contract that we have with the government, and 133 in construction loan. We are looking for a syndicated credit of $215 million to finish the project. Now, if you have any questions or answers, we'll be ready to answer.
Thank you. We will now begin the question and answer session. If you have a question, please press star then 1 on your touchtone phone. If you wish to be removed from the queue, please press the pound sign or the hash key. If you're using a speakerphone, you may need to pick up the handset first before pressing the numbers. Once again, if you have a question, please press star then 1 on your touchtone phone. The first question is from Guillermo Alarcón from Da Vivienda. Please go ahead.
Thank you. Good morning. I want to ask, you say that you are bidding in a project in Chile. I would like to know if you're awarded, what could be like the income that such project will mean to Empresa Energía. And my second question is related to the EBITDA margin. If you look at the EBITDA margin for the end of the year, like in some years ago and now, you see a reduction in the EBITDA margin. So I would like to know what are you forecasting for the next year related with the EBITDA margin of the whole group? Thank you.
Guillermo, as you know, we are in the process of expecting the results of the biddings in Chile. So I would like not to say anything about our offer because it's a competitive process. So maybe if you can wait until June 12th, we will have the results. But we are very confident that we are in a good position to win those two processes.
Thank you. And Guillermo, in relation to the decrease in EBITDA margin, I suppose you're referring to the consolidated EBITDA margin. The reasons behind it are related to TGI's operations. First of all, you will have to take into account non-recurring costs at the beginning of last year, especially those related to the debt management operation that the company did in that period. And also, you will have to take into account that the company has exercised some BOMT contracts that were operated by third parties. So TGI is now assuming those operating costs. What the company expects, and I'm talking here only about TGI, is a stable EBITDA margin for the future. I'm sorry.
Thank you.
If there are any additional questions, please press star then 1 on your touch-tone phone. Standing by for questions. And at this time, we have no further questions. We do have a follow-up question coming from Guillermo Alarcón from Da Vivienda. Please go ahead.
Thank you. I will want to ask. I want to ask in terms of your like income forecast. I know you are like in regulated markets, so it's very stable. But I don't know if you have like a guidance about the consolidated income for the next years, as you are participating in some process. What do you expect to grow your income to grow more than inflation or around inflation? I don't know. I would like to know if you have some guidance about your income forecast for the consolidated group. Thank you.
Thank you, Guillermo, again. As you know, since we have some covenants related to bonds issued by EEB and TGI, we're not very flexible in terms of giving projections to the market. But what you say is the clue in order to disclose what the future of this company could be. Most of, at least 80% of the revenues of EEB on a consolidated basis are regulated revenues. The remaining 20% are revenues or income coming from Empresa, basically, which is a non-regulated business. So if you look to the history, I mean, what I'm trying to say here is that the history is like a good guidance in terms of what could happen in the future in terms of the company's revenues.
Okay, thank you.
Thank you. And the next question is from Federico Suarez from City Valores. Please go ahead.
Yes, thank you for the call. I would like to know if you have a targeted percentage of revenues going forward for natural gas vehicles for the ConTugas operation.
Say again, please.
Do
Can you repeat
have,
the question?
yes, do you have an expected percentage of revenues as a target for the natural gas vehicle sector, meaning is that a growth potential factor for ConTugas in Peru?
Yes, we have a couple of projects that are allocated in two special areas, which is Marcona and Pisco around that area, which are focusing on doing that, which is taking the gas from our pipe and deliver to some of the areas around the Ica based on vehicles. So yes, we have percentage can be right now we have about between 5 to 8% of that percentage of the total demand that will be focusing on that. The other thing is growing very fast based on as we make progress on our building the pipe. So yes, this is something that we are having. We see a good future on our system.
Thank you very much.
Once again, if there are any additional questions, please press star then 1 on your touch-tone phone. And at this time, we have no further questions. I'll turn it back to our speakers for any final remarks.
We would like to thank everybody for attending this call, and we hope to see you in our next quarterly results conference calls. Thank you very much and have a nice day. Bye.
Thank you, ladies and gentlemen. This concludes today's conference. Thank you for participating. You may now disconnect.